All right, welcome everyone. Welcome to another live trading room with the 5ers. I hope you guys missed me because I did miss you quite a lot. I was away for 2 days celebrating my fiance's birthday, and what a time to leave the desk. Like the volatility that we saw during these days is volatility of a lifetime. Of course, I did not bring my laptop. So I was sitting on my phone, and my fiance's like, "You're not supposed to be trading now," but you know. We haven't seen this since COVID. Like, I gotta do something. But yeah, today, Victor, I would like to also thank you, man. You did a wonderful job hosting Monday and Tuesday. You had Saul on yesterday, and then you had Rich on Monday, and fantastic work. I actually looked at the replays and the comments, and yeah, that was really good live streams. So I do appreciate that as well. How are you doing? And how's everyone today? We got a very exciting episode here today.
Hi, everyone. Yes, I'm excited too for this live stream. I'm very excited because I know the importance of journaling. If there is one thing that I would like someone to learn, someone who's learning trading, that is the habit of journaling, using that power to your advantage. So today is a very important day. I'm very excited for it. And Jonathan,
Yes.
it was my pleasure, man. I enjoyed it being and covering for you. I enjoyed it very much. I'm an introvert guy, but somehow I
Yeah.
enjoyed this being in front of the audience. So I enjoyed it.
Yeah, it's amazing, isn't it? Like I saw how you kind of like started just shining up, and like, yeah, you did a really great job. I'm getting some comments that your sound is kind of breaking out a lot. So while maybe while Rolf is getting on here and he's going to do a presentation, maybe you can, maybe you can do a restart or something and try to get that audio working. So. Okay, so Edgewonk Trading Journal. Now, this is a software that I've been using, I believe, since 2018. So what we have now is we have the creator of Edgewonk Trading Journal with me here, Rolf, and he's going to do a presentation on the Edgewonk Journal. I think, this software here is, it's a lot of my profitability, and the fact that I became profitable in the time span that I became profitable is thanks to this journal. So it's a true pleasure to introduce Rolf, and during this presentation, we're also going to do a giveaway, right? So we're going to be giving away 3 yearly subscriptions to the Edgewonk Journal, and we're also going to give away 3 100K Bootcamp accounts to 3 lucky winners. And you also have a discount code in the description of this video that will give you a $10 discount on any of the plans at Edgewonk. All the information that you need is in the description of this video, including the link to the giveaway. And during the live stream here today, we are going to give away a secret code during the live stream. So without further ado, it's an honor to introduce Rolf from Edgewonk. How's it going?
Hi guys, good to be here. Thank you for having me.
Well, very good to have you here. I think before we do this presentation, I would like to know, a little bit about you, more about you. Like, who are you as a trader, and what prompted you to create this trading journal?
Yeah, sure. I got introduced into trading during my late teens. I immediately caught the bug of just the idea of making money by buying, selling companies, stocks, and that was fascinating. Then I pursued a university degree in finance with a heavy focus on stock markets, finance, and then always traded at the side during my university times. And the idea to create Edgewonk came because I partnered up and I met a friend on the way, Moritz. He's my co-founder of Edgewonk. And he's coming from a big poker background. And in poker, it was quite normal to have huge database of statistics and just analyzing your games to see how you can improve your edge. And back then, this was not a big thing in trading. When we started creating Edgewonk, there were maybe 2 or 3 other journal services around, but they didn't fill the need what we wanted for our journal. So we created an Excel spreadsheet just for ourselves, and then it became better and better over time. And then at one point it became so good that we said, "Wow, this is actually so good. We could start offering this to other traders." And that's how then Edgewonk was created. And then over the years, I think we're now almost in our 10th year. 2025 is our 10th year. Yeah, it has grown and developed and improved with the the feedback from our community as well.
Yeah, that's amazing. And I think, the fact that you were two traders having a spreadsheet, and I think everyone had that spreadsheet in the beginning, like everyone had that in Excel sheet. And the fact that you kind of took that Excel spreadsheet and you created something that worked for you, and then it became better and better. And you're like, you know what, this actually works. Let's create something big out of this. And I think that's the perfect way of creating a product like this. You actually solve a huge problem and you create it from the ground up as traders. And I've been using this journal a lot, and I've actually been using a lot of different journals out there, and I always come back to the Edgewonk journal because it's like I feel like that has everything that I need in the journal, and it's such a lot of cool things. And I'm sure you're going to break this all down and show everything. But I like having alternative strategies. I think that's the biggest thing for me, being able to look at how would the alternative strategy performed on this setup. And right now I'm in the process of testing different take profit strategies, and I do that with the alternative strategies system, which I think is absolutely wonderful. So hopefully you're going to show that, because I think that's very, very valuable. But I think, why not just jump straight into the presentation? You can, if you want, you can share your screen by clicking the present button at the in the middle, the lower middle.
Yep.
There's a screen and a plus sign.
All right.
Can,
let me just figure it out. I think this should be it. All right. Should be able to see my image.
Yes, I'm going to bring it up right here and we'll have it right away.
Cool.
Nice. Perfect.
So over the years, I've also done, if you check my the Edgewonk YouTube channel, I've reviewed so many of the journals from our users. And I always try to help them to find ways to improve. I look very deep and go very deep inside their journal to see, okay, what is going wrong? Where are they making money? And funnily enough, over so many reviews, I found that the majority can be broken down in 3 steps, or in 3 different bigger aspects. Why do traders lose? And then eventually how they become profitable. And we always heard that trade your plan, but this is the first major issue you have to fix in your trading. If you can't fix that, nothing else matters in your trading. So hopefully you have a system where you have rules. That's already a very big step, but you need to make sure that you follow your rules. We have all heard this quote that I think Richard Dennis said he could publish his trading rules in the newspaper, but people would still end up losing money. And the problem is here that traders break their rules. What is the biggest problem? They get in too early, so they break their entry rules. They revenge trade. So after a losing trade, they jump right back into the market, even if there are no signals and criteria present, or they are in a, they have missed the trade, they are late, and then they start chasing the price, and that's obviously going to turn into a lot of issues. Of course, we can get more granular into what it is, but this is the main first corner stop. You have to start respecting your rules, because once you do that, once you respect your rules, you can take this then into your journal, and then you can see, okay, which of my rules is actually contributing to my winning trades? Where do I make the most amount of money, and where do I lose money? And that's such an important insight once you can really see. And I think that's the benefit of having a journal and looking at your data. You can actually see for yourself what is making me money. Most traders, when they only leave their trading performance in their broker account, they have their P&L breakdown, they just say, okay, I lost 10 out of 20 trades, but they don't see why and what is the reason and what is working well. I've reviewed some journals where the trader was consistently losing money, and then I looked at the journal and I looked at some of the trades, and those trades were making so much money, and he tagged them with the tag, he followed his rules, he stuck to his trading plan. But the other trades where he didn't follow, that's why he was losing money. So if he would just follow his edge, he would have been a profitable trader. And that could be such a big eye-opener once you see my system is profitable at the core. And if I just follow my rules, I will make money. That's such a big insight. Then the next step is you have to start controlling your risk management. Very, very important also for funded traders, because you have rules on risk outlines, and you have to make sure that you avoid single large losses. I think that's one of the biggest problems that traders face, is they can keep it up for a week, maybe for a month, maybe 2 months, but then this one situation comes around where they completely abandon all all a good plan, and then they realize a single large loss that wipes out weeks or days of previous progress. And you can also reduce the noise in your account. You can achieve, and you should achieve, a very stable equity graph in your trading. It shouldn't have those wild swings, because those wild swings are also very, very hard to deal with emotionally. They will wreck your mental game. And that's why that's the second step. You need to stick to your rules, and then you need to manage your risk. And then what I've seen time and time again, the next biggest problem is that traders cannot let their profits run. They will have a winning trade, but as soon as the market moves a little bit in their favor, they are scared to give back the profits that they see on their broker P&L. And then they will often close the winning trade too early, ahead of their take profit. And what we have realized in Edgewonk is that you can track actually how much money you could have made if you would just stick to your initial trading plan. And I'm going to show you that as well. How do you find out if you're losing money on your trade management decisions? And again, this could be really a big eye opener once you see that just by following your trading rules, not exiting your trade, trusting the system, trusting your analysis, you can make more money by just sticking with your trades. And those are really, really big eye openers. And I will show you exactly how to do all of this in Edgewonk in a moment. So before I jump into Edgewonk, just 30 seconds, what is a trading journal? Because a lot of traders don't know what it is. It's very simple, actually. It's a tool where you record your trades, so you can easily import all of your trades within seconds. MetaTrader 4 or 5, we sync automatically, instantly. In all other platforms, it's just a click and then all your data is in it. Then second step, once your data is in it, you can look at your data. Obviously, you can get insights into your trading performance, but also very interestingly, in your trading behavior. How are you respecting your rules? How you're treating your rules? How are they impacting your performance? Based on those insights, step 3, you can make targeted adjustments. That's the key. You find out exactly, or you see what Edgewonk is telling you, what is working, what isn't working. Based on that, you can adjust your trading approach. And then finally, hopefully with those adjustments over time, you will see gradual improvement. It's not going to happen overnight. It's not like you just switch one thing and then suddenly you print money forever. It's a gradual process. You find one thing, you fix it, and improves. Find one other thing, you fix it, improvement. And that's the general progress that you should be looking after. And it's a steady process, but it's also very, very targeted and goal-oriented. All right, so let's jump into Edgewonk. The first thing that we want to look at, as I said, the first thing you need to make sure is stop breaking your trading rules. You have to start trading with discipline. You need to find out, when are you breaking your rules? How much are you losing? It's a constant reminder when at the end of the day, you revisit all of your trades and you relive them, because in the moment when you are trading, you're very rarely learning any lessons. You're not getting any insights because there's just so much going on, pressure, money is on the line. So by revisiting your trades, you will learn so much about your trades that you might have missed during your real trading times. And you can distinguish between good and bad trading. What is causing your losses? What is making you money? So let me bring in Edgewonk. I will just slide it in here and I hope it shows up for you. You see Edgewonk?
Yes, we do.
Looks great.
Cool. So that's the home screen. There's some demo data in it. This is just the home tab where you get a brief breakdown of your trading performance. With Edgewonk, you can create pretty much unlimited trading accounts in your journal or track. So if you track, if you have 5 trading accounts, 10, 20, you can all journal them in your Edgewonk very easily. All currencies, if you're a scalper, day trader, swing trader, long-term investor, you can track that, doesn't matter. It will all automatically adjust. So, all right, so let's take a look at how do you trade? What is your trading rules? So in Edgewonk, this is the heart of Edgewonk where you see all of the rules. And we have one thing that I'm really, really proud of. It's called the tilt meter. The tilt meter analyzes how well do you execute your rules. Red tilt meter shows that you have broken your rules. Green tilt meter shows that you followed your rules. So in each trade, you see immediately, was this a good trade? Not based on the outcome, but based on the process. And I think that's really important that traders get to this process-oriented mindset. We have heard about it probably when we talk about trading psychology, the long-term mindset. The process-oriented mindset is looking at how well do you execute your trades, regardless of the outcome. So the larger the tilt meter in the red part, the more you have broken your rules. A small green tilt meter says that you've stuck to your trading rules, but there might have been an issue. So on every trade that you take, you can rate your, one sec, where did it go? Here. You have your entry, your exit, and your trade management comments. So those are the critical parts of a trade. The entry, the middle part, the trade management, and then the exit. And you can rate them. How was your entry? Was it an entry that was too late? Was it a perfect entry? How did you exit the trade? How did you manage the trade? And all of those things are completely customizable. You can write whatever you want based on your own style, your rules, your trading system, the problems that you are facing, you can customize them. And once you add them, then adjust the tilt meter. The cool thing here is when we go to the equity graph, this shows your account development over time. We can overlay the tilt meter with it. So here we have now in the graphs, the bar graphs in the background, that's the tilt meter. Maybe in the dark mode, it's a little bit better, maybe. So what you can often see, there's a direct correlation between the tilt meter in the background going up, which means that you have repeatedly followed your trading rules, and your equity graph rising. This means that when you follow your trading rules, whoops, that's a microphone, you realize better trading outcomes. So you follow your trading rules, the trading results will be better. Here the tilt meter dipped, and then the equity graph also went sideways for a period of time. And this correlation, when I review the Edgewonk journals from our users, comes up time and time again. And it shows you that it's so important to stick to your trading rules, and this direct connection between execution and outcome is very, very obvious. We can then even go further. Here we can take a look at the entry, at the comments. Those are all the entry comments that we have assigned to our trades. The perfect entry made the most money. And then when you look here, impulsive trades, trades that are too early, revenge trades, they are losing money. So you can see right away what is making you money and what is causing you losses and how much are you losing. And once you realize that, I think this can lead to also a behavior shift, because that's the end goal. Analyzing data is good and it's fun, but it has to lead to an actual shift in your behavior. And what I've seen is that once you see this data and the results black on white, then this will actually influence your decision making, because then you have actual proof what is working and what isn't working. And you can look at your trade exits. Okay, when I follow my exit rules, it's making money. When I'm entering early, exiting late, or I'm greedy, I want to hold my trade too long, it turns around before my take profit, that's costing me a lot of money. So that's the first part. Stop breaking rules, and that's the first thing. The next thing we talked about, manage your losses. We need to make sure we avoid single large losses. And for that, we can improve our position sizing. We want to reduce the noise. We want to reduce emotional pressure. And we want to achieve a smooth account growth. In Edgewonk, it's very easy. When you're watching my reviews of the journals, I always go to it's pretty much just the risk distribution. So that breaks down and it shows how much are you losing per trade, and then gives you this distribution. So here we can see most of the outcomes of the trades are clustered here in the middle. So this seems to be very consistent position sizing. The trader realizes relatively similar losses and gains, but there are outliers. The positive outliers, I would not worry too much about it. Maybe you could look into why this trade performed so well and what did you do here to realize such a large outlier. But here, those negative losses, and I've seen journals where you have large losses that are clustered on the far, far left. And those are losses that can wipe out weeks and months of trading profits in just one or two trades. So looking at those trades, here we have a trade that is relatively large relatively compared to what the trader is usually doing. This will adjust to your position, to your trading automatically, so you'll right away see the outliers. And then you can go back to your journal. You can see, okay, what are my large outliers? You can analyze them further. Those are my outliers, the two trades. Okay, they already have a red tilt meter. I have a pullback trade and a pin bar trade. You can track your trades, by the way, based on the setup. So if you have different strategies, you can tag each trade based on the strategy that you have taken. And then later, when we go to another other tool, you can see, okay, how are my different strategies performing? So here you can see right away, okay, there are some of my strategies or setups, however you want to call it, that are performing really, really well. But there are also other setups that here the spike trade, whatever this might be, it's not making money, it's losing me money consistently. Here's one that is more or less break even, although I've taken 9 trades. That's not a good sign. I need to look into this. And then in Edgewonk, you have those filters. You can really, really deeply dive into your trading journal. This is an interactive table. If you are an Excel freak, you will probably heard of pivot tables. They work exactly that. For example, we could say, okay, we want to analyze our trade setups, the strategies, and we want to gain extra insights. And then we get the breakdown of all our setups. How is the average quantity? How many trades did we take? What is the win rate of each setup, the average P&L, the profit factor, and so many other things. So that's the risk part. And by the way, if you have any questions, just jump in. And then we come to our, sorry?
No, sorry, go ahead.
All right, then we come to the maximize winners. That's maybe my favorite part of the journal because it's such a helpful tool. You want to maximize your winners. You want to start letting your winners run. Most amateur traders struggle with this on a very high level, that, as I said, they exit their trades before they take profit and they could have made more money. So how much money are you actually leaving on the table? How does the price really move? You want to adjust then your exit approach, but you can also look at your take profits. And we want to look at our trade management. So let's go here to our chart lab. And this is called trade management. And this is, I just like it so much. This is the green line, is the potential performance. How much money could you have made? The blue one is how much money did you actually make? The beginning, it was not good because you could have potentially made more money than you did because the potential performance is above the actual. So potentially in the beginning, you could have made more money. This means, the way Edgewonk analyze it, that on your winning trades, you exit too early. This is what this shows you when you potentially could have made more. It shows you that the price would have... Yeah.
I have a question on this. Sorry to interrupt, but I have a question on this. So when it says that you could have made more money, is that what statistics is that based on? Do you have to actually input that, an alternative strategy, or is this based on your tilt or your entry comments?
Right. So we use we compare to a set and forget approach. So you enter your trade, you have your stop loss, you have your initial target, and then we see where did you exit. And in Edgewonk, to unlock this chart, it's very easy. There is one feature or one thing is called original take profit hit, OTP hit. So for every trade that you enter under advanced trade data, you just go to OTP hit and you say yes or no. Did this trade hit my original take profit? Yes or no. And that's all that will unlock it. And so we base it on a set and forget approach. Your active trade management is what you actually realize, the actual performance, and potentially is the set and forget approach. So that's, I think, where most traders go wrong. Very often I see the traders enter their trade, they have a set take profit, they have a set stop loss, but then they mess up somewhere in the middle or somewhere in between.
A follow-up question. Yeah, okay. So just one follow-up question to that. So if I put, because I'm using this function a lot and I think it's absolutely wonderful. I mean, it's really powerful. So if I put in, so let's say I exit too early and I select OTP not hit. So did my original take profit hit? I select no. But how do Edgewonk know how much money would have been made on that trade?
All right. So good question. When we look at the set and forget approach, we ask with the OTP hit, was the take profit hit? Yes. Okay. Was it hit? If it was hit, yes, then you get whatever is here, the potential. If you say no, we count it as a losing trade because we say that you enter the trade, either it hits your stop loss or your target. One of the two things is with a set and forget, because the set and forget is pretty much a passive approach, right? So you don't interfere with your trade at all. You put it on, you can close your computer, walk away, and it either hits your take profit and your stop loss. The take profit is whatever R multiple you have, and the stop loss is then -1 R because this is all in R multiple. And that's the way we use it. if on your side, then if you have such a realization that you can see, okay, my actual performance is below my potential performance, what's going on here? The next step, what you could do then is go to your alternative strategies. The one that you mentioned is you want to look into it more granular. What is actually the better approach for my trading? That would be the next step. This is just to get an idea, is my trade management, are my active trading decisions, are they working or are they costing me money? And then once you have that, then you can look into your alternative strategy and see, okay, what is actually better? This is mostly done relatively automatic because you only need this OTP hit. With the alternative strategies, as you know, you need a little bit more data input. So this is the first step, to just get a brief idea, okay, is it working or not? And then the next step, you can go more granular. And with a little bit more time investment, you can really fine tune this.
I have a question. Maybe I didn't understand it completely, but in the case that I close a profit before my TP, would that be count as some profit or a -1 or -1R?
It would be counted for your actual performance the way that you realized it. Let's say you have 1R, it would be counted as your actual performance as 1R. But for the potential performance, it would be counted as -1R, because we really base it on a passive approach. If you would not have interfered with your trade and the price would have kept going and you said OTP hit no, it would have gone to your stop loss. So the question you have to ask yourself is, was my take profit hit before my stop loss? So you enter your trade, and then after the fact, you just look at your trade and say, okay, did the trade hit my stop loss or my take profit? Take profit hit is OTP yes, stop loss hit is OTP no. The active trade management decisions that are then visualized here in this blue line, the actual performance. So based on where you actually,
let's say.
So actually, what we're go ahead.
Yeah. So if I exit my trade halfway to TP, I can't put that in that unless TP or stop loss gets hit. So I'll have to wait for price to actually develop.
yes.
So right, okay. So I'll go back maybe the next day and see, did my TP or stop loss gets hit first? And then if
Correct.
stop loss is hit first, that is a no. And if TP is hit first, that is a yes.
Correct. Yes.
Right. Yeah. Okay. So it makes perfect sense now. Yeah, I get that.
And because this question comes up quite a bit, we also say you can choose different cutoff points. For example, the day traders want to look not at what happened the next day, but what happened during that day. At the end of the day, was my stop loss hit, yes or no? And then based on that, you can make your adjustments. But you can also say, okay, what happened?
Yeah, as a swing trader, I always do it on every weekend, right? So I always, I go through all my trades on the weekends, and then sometimes I open a trade on Friday and I'll look at it on Sunday and then have it hit, so, and then I'll just do it the week after. So I think you like you said, you kind of have to have a specific day where you go through your journal. If you're a day trader, you do that every day. If you're a swing trader, you do it weekly.
Correct. And that way you already know, if you always have the same time frame, you know what this data is saying to you on how long would the holding time period be on your trades.
Yeah, and I think something like this is, I mean, if you would only take this, I mean, this would push you far towards profitability, just to know if what you are doing is the most optimal way of doing things. And it's so simple. Like do you hold the trade or not? It's one question, and that will just help you a long way towards profitability.
Correct. Yeah. Yeah, totally. It's such a big issue for traders that they cannot hold the trade long enough. But once you see that and you see exactly, okay, I should have trusted my system, I would have made more money, then okay, my system seems to be working. I should not second guess it. I don't know more about the markets than the rules that you hopefully have tested before or developed over a year or 2 years. Just trust the system.
I have another question, Rolf, about the, I think a couple of sheets back, you mentioned there was a chart where you showed a histogram, it was, where you showed the different strategies, or not different strategies, I'm sorry, different results labeled by revenge trade or some other characteristics. And my question is, how does the journaling application know which label applies to which trade? And is it something automatic, or is it something we have to, like, the user has to put in a tag or something similar?
Yeah, so there's no way of knowing why you did what you did. So this is a user input. So this is those are all the individual trades listed. And then we have here the entry, exit, and trade management. And then you say, okay, this trade was a trade where I entered too late, revenge traded, I get in too early, too late, it was an impulsive trade, or it was the perfect entry. And you just go through the trades. There's no way of automatically doing it. Would be amazing. We try to automate as much as possible, but the more time, and it doesn't take a lot of time, the more time you spend with your journal, the more rewarding the outputs will also be.
I understand. Yeah. Very nice. Very nice.
Yep. And I don't think in this journal it's filled out. We have something to improve. Oh, it's actually filled out. It's called exit analysis. So this visualizes every single trade with a red and a green bar. So every trade, maybe I can show it to you better in light mode. Every trade has a green bar, which shows how much did the price move into my favor. The green horizontal line is the take profit. And how much did the price move against me? That's the red horizontal is the stop loss. So you can see here, the price made it halfway towards the stop loss, and it made it all the way towards my target. And this black diamond mark, I'm not sure if you can see it on YouTube, this is the actual exit. So what we have seen is traders are sometimes either too optimistic with your target or they're too conservative. And if you see, for example, that your your take profit is so far away that those bars don't reach the take profit, it means that you are too aggressive, too optimistic with your take profit, and that the price is not reaching your take profit. By maybe adjusting your take profit slightly, more trades could hit your take profit. Or on the other hand, what is probably more common is that traders use stops that are very, very far away. The price doesn't reach those stops, and that way they are giving away a lot of R, because the further you put your initial stop loss, the harder it will be to get a good reward to risk ratio, right? The closer your stop loss, the easier it is to get a good reward to risk ratio. If you see that on a large sample size, the price is not reaching your stop loss at all, not even coming close, you might experiment with moving your stop loss slightly closer, not a lot. You want to adjust that gradually over time so that you can see the impact without completely messing up everything. But if you see that the price struggles to reach your stop loss, maybe your stop loss is too far, or you are very, very aggressive with your stop loss, price immediately hits your stop loss, but then also goes to your take profit. So that's another thing that you could come back at the end of the week and do that analysis to see, okay, my trade played out in this way, but if I would have looked at the broader spectrum, how would the price have made it to my target if I had used a wider stop loss and if I wouldn't have been kicked out so fast? So that's
this is a really beautiful chart. What was the statistics you had to add again to see this?
So this is just the highest and the lowest price. What is the highest price? And here you have options again, how you want to do this, because based on the insights you want to get out, you can do it right away at your time of your exit. What was the highest price at the time of the exit and the lowest price? Or you could come back at the end of the day and the end of the week and see how much did the price fluctuate overall during this week. I would recommend to choose one or the other.
Yeah. So what I did with this, because this is one thing that really helped me. What I did was basically when either TP or stop loss got hit, that's when I put in the numbers. So I could clearly see that. So when I started trading, I used a pretty a wide TP. So I could see that, wait a minute, like few of my trades hit that last TP, but a lot of my trades, like almost all the trades, went a little bit into profit first before hitting my stop loss. So simply what I did was I went from, looking for 3-hour trades to half an hour trade. And that, like first looked at 1 hour, and then what happens if I use a negative risk reward? And I looked at that graph and I saw, well, wait a minute, like every trade, like almost, insanely high win rate, like almost every trade went to, half an RTP before hitting stop loss. So that just like, I couldn't really believe my eyes first, because the idea of having a negative risk to reward did not make any sense at all to me. But then I looked at that graph and I'm like, well, every single trade, almost like 90% of my trades actually move into profit after entry. So very, very powerful stuff right here, because you will not, this is not something you can see in the market. You can only see this with a trading journal. So it's going to be impossible for you to read price action and figure this out. It's only in the statistics. And I think this is a beautiful example of why everyone needs a trading journal if you want to be a serious trader.
Yeah, you can just ask yourself, do you remember your last 10 trades? And how much do you remember about your last 10 trades? And the answer is probably going to be very similar for pretty much everyone. And that shows that you need some way of record keeping, that you have a way to go back and actually learn from what you did in the past. And yeah, record keeping is really important. We can, so those are the main things that Edgewonk has. I think this will cover probably 80% of the traders up until they are profitable. And then you can go really, really granular. We have much, much more here, obviously. We also, in the beginning, Edgewonk was just a purely data-driven tool, only hard numbers. We added here a notebook editor, which acts like a regular note keeper. You have different categories on the left, and then you have here just a regular note editor that you can use. We have sessions, which have become really popular. If you want to do a session review, so for example, at the end of the week, you can come here and you say, okay, what is the period I want to see? And then you can just choose the time frame. Okay, the trades between the 1st and the 8th. In this journal, there are no trades here, but it would then populate everything. It would look something like that here. Oops. You have 7 trades, 5 winners, 2 losers. What's the win rate, the gain in percentage, the R multiple, and then the tilt meter if it was. Here it's break-even tilt meter. You can also write down your notes, so you can really reflect on what happened during that week. You can write down your lessons, things that you learn, things that you want to improve. And then over time, you can build a very nice catalog where you can follow your progress over the weeks, or however you want to use those sessions.
Yeah, I think for me, one of the and you're probably going to go through it as well. For me, one of the most powerful thing was to add in the beginning, at least, like I used the journal as sort of a system development tool as well, where I took a trade and then I had custom statistics set for every indicator that I was using. So let's say I used 5 different indicators to determine my entry trigger, and then I could have an entry trigger and I would mark out which of these indicators was active during this entry trigger. And then I went into advanced journaling, and I looked at like what combination of custom statistics was most profitable. And that kind of created the system that I'm using today, because I could clearly see on the graph, if I use this combination of indicators, I would have this success. So I think that is super powerful.
Yeah, custom statistics, as the name suggests, they are completely customizable. We have 20 custom stats or slots right now for you, and they are free to use in whatever way you want. In the beginning, I know people get crazy and they start filling out all. As you learn journaling and as you learn to know yourself better as a trader, you will get new ideas for what you could track. So in the beginning, try to keep it at a minimum, maybe just 3-4 custom stats. And then as you learn, you want to have still some free open slots. So you could track timeframes, confluence factors, patterns that you're using, preparation level, mental stats, indicator values, or whatever tools that you're using. You could track general market information. Was the index up or down that day? Is the VIX up or down? You can track, we haven't even covered that, missed trades that you didn't take, to analyze that's why did you miss that trade, which I think is also really important to find out. Do you miss trades because of process issues? So you were not aware, you didn't prepare your charts correctly. Did it happen overnight? And what can you do about trades that happen overnight? Can you work with limit orders maybe? Or is it just something that you have to accept? Or are you at work? You couldn't trade. And those are completely customizable, and then you can analyze it in in many different ways. You have here the breakdowns of the different custom stats. You can switch through them. You can directly compare them in your trade analytics. So you just add your custom. Here there are all the custom stats, timeframes, confluence factors, patterns. You can also just go to your journal and then add your custom stats to see, okay, I want to see trades that I took on the daily, 4-hour time frame, maybe where I had all my confluence factors or 6 out of 6. And then you can see, okay, those are all the trades. You can look at your equity graph. That's how it looks. Okay, so this combination is not working for me. And this is something, by the way, for just to give you an idea of where we're going. We want to automate this. We want to show you what is the best combination of custom stats and setups that you can use.
That's super exciting. That, like, I saw your tweet on Twitter. You said something about automating, you know, something about, you know, Hooch, and like something in the back of my head kind of talks like, is there some AI in here? Is there potentially some use of AI in this?
Not yet. We are looking at it. The notifications or the automated analysis system is starting just with a framework. So what we're doing right now, and which is coming, I'm not want to say it's coming very, very shortly. We're in the final stages of testing. But what we will do is that we run automated analyses on your journal to show you each week. And there will be a little notification area here. What's your best setup last week? Did you overtrade last week? Did your expectancy drop? And those type of things. In the next step, we will then go into more advanced. We want to see first, how do traders respond to having automated analyses, and what do they want to see? What do they feel that they want to analyze? We're always listening very closely to the feedback. So we're just starting one step at a time, see, okay, how do traders like automated analyses? And then we have a few ideas for future down the road. AI is certainly on the table, but as of now, it's not necessary. I've talked to our developers. They also say the amount of data here is a little bit overwhelming, so it would ramp up the cost. And as you've seen, Edgewonk is relatively affordable compared to other journaling tools, and we want to keep it that way. We don't want to make Edgewonk more expensive. We want to make sure that it's still at a very competitive price. So that's always a big concern of ours. So we will see. It's on the table. At one point, it's definitely going to come, but not sure how fast. But automated analysis.
Well, I'm personally very, very interested in the automated, because that means that simple things like, you know, there might be someone out there who haven't thought about the idea of looking at what's your most profitable weekday, and then maybe you'll get automated information that says, like, you know what, for the last 2 months, Monday has never been profitable, so maybe, you know, you should stop trading Mondays. I think something simple as that is also going to help. You know, it's the little things, and I think that's gonna. I'm really, really looking forward to that, because that also means that, you know, having a little bit automated means that I'll be doing a little bit less work on my own. I think that, you know, being able to, you know, do a little bit less of that statistics gathering, you know, more automatic, that's going to help me a lot. So I'm personally really looking forward to that.
Yeah, that's the goal, because we have so much in here, and we just want to help traders get more out of their journal. Of course, you could go to your performance by time. You can look at what is the best day, what is the best hour of the day. It's all in there. But if you can just get it automatically right in front of you at the beginning of a new week. Last week, the best time was here 11 a.m. and 12 or 1 a.m. That would be very helpful, because you don't have to dig for this data. And that's where we're going.
I think the case for having a journaling application is very compelling, because, I mean, theoretically, you could be, you know, tagging in a spreadsheet and doing everything manually, right? Because you will have to, if you're very handy and you know what to do. But just imagine how much time that would cost each one of us if we want to have, you know, 10, 20 or even more types of analysis, because you don't know in advance which analysis is relevant. And maybe that changes with time as well. Maybe the beginning of your trading career, these analyses are more important, but that may shift. And if you're going to make use of that analysis, you have to be populating it. You need to be, it takes a lot of time which will be taken off from trading, executing. So in the end, it's productivity that is going down. So efficiency. I think it's a great case to be made for having an application like Edgewonk that does this so easily for you, for everyone.
Exactly. When we started out, we built this. We started with we are not developers, me and my co-founder. So we started with Excel spreadsheet because there were no other options. There was no way of having a tilt meter. There was no way of a trade management. So we built it ourselves. It took a lot of time. And nowadays, this is all done by our in-house development. And we don't touch it anymore because we understand this is 169 without, if you don't have, with the discount, it's even less. So you can calculate it. How long will this take you to build? 20, 30 hours? So that's going to be a $5 or $8 per hour of time if you break it down. And your time should be worth more than $5 or $8 per hour to see that this is a valuable long-term investment. And as you said, it grows with you. You can stick to the absolute basis. When you get Edgewonk, there is a journaling course here. And this journaling course walks you through everything from Edgewonk from the beginning, when you open it the first time, getting in your first trades, making your first analyses, what to pay attention to in the beginning. And then as you progress as a trader, and as you progress also in your knowledge about journaling, you will see those new needs. And then we'll show you exactly what features to then focus on. There's so much we haven't even talked about in this video. So it really grows with you.
Yeah, I definitely recommend that. Yeah, there's actually a question about this. If there's any journal, explanation of the journal tool, and like you said, the course, the journaling course that you have is really good, because the Edgewonk journal is quite big. It's actually huge. Like, it's a data gathering tool, and you'll have like many different charts, and with all the custom statistics, it can, in the beginning, at least for me, it felt overwhelming, right? But then you went into the journal course, and it kind of like I mean, I'm like, and Victor is the same. We love journaling. We love statistics gathering. Like, we know the power of statistics. So I would say that I probably spend more time looking at my trades in the journal than I actually do trading and my technical analysis. I can sit hours and hours and hours just going through data, because I know that somewhere in there is the key to making more money. So it's like, I think that's, yeah, it's amazing, and the course very good.
There is go ahead, Rolf.
And I totally understand that in the beginning, when you open it the first time, there's nothing in there and you see all the features. It can feel overwhelming. We totally get that. We have just redone our whole design 6 months ago, I think, to focus on that, to make it easier and easier. And we're going to continue on that. With the automation we're going to have a better onboarding, so that we walk you exactly through the steps, how to get your trades in, how to start analyzing. But it might take maybe a week until you're familiar with the process. And afterwards, you will start exploring, you'll venture out into other things, you will see the filters, the tools. But it does take a little while. There's a learning curve. There's no question about that. Yeah.
What about no, actually, I forgot what I was about to say. Sorry about that. Go ahead, Victor.
No problem. There is a viewer who is trading based on an EA, and this viewer thinks that maybe journaling may not, offer much, it's not very necessary. What do you say, Rolf? Can an EA trader benefit from having a journal as well?
I'm not super familiar with EA trading. I know the framework. I think the process and all of those, the qualitative things will not be helpful because you're not executing your trades. The data parts could be interesting, especially probably also the exit analysis. How is the price action behaving around my trades? That could be interesting. Reward to risk ratio in general could be interesting. Those types of things could be interesting, I guess, for EA traders.
I think daily, looking at daily as well, you could find some information on seeing like maybe some of the days of the week is less profitable. So I do think that there is a lot of data that can be useful when you're trading EA to look at, because basically what you get is you get a complete insights into the performance of the EA. So instead of just getting your actual profit and loss, you'll see more details of how it's actually performing. So yeah, I personally think it would be beneficial even with someone using a EA.
I would think the optimization of your stop loss placement, your TP placement, and perhaps even your entry rules, even if it's on EA, if you have the data, you have the key to improve it. And otherwise, you got to have the data, and this is a great way to analyze the data whichever way you trade. So I think yeah, I think it's for every trader it should have a lot of benefits.
What about automatically adding your trades? I know that I've got the function activated, but is that something that you're potentially working on with the MetaTrader integration, to make it a little bit smoother, if you know?
So MetaTrader 4 and 5 are automatically synced. In MetaTrader, the way the technology for MetaTrader is set up, every time you make a trading decision, it automatically syncs to Edgewonk. So if you move a stop loss, if you exit a trade, it's always instantly in Edgewonk. It takes a few seconds. MetaTrader 5, you can set update intervals. So you can say every 5 minutes sync my data, every 10 minutes sync my data, and then all the trades will be there. We are looking to expand this to other platforms as well. But for now, you can upload your trades using import. So we have hundreds of brokers, dozens of platforms here. And if, for example, you say, okay, I work with CTrader. CTrader, it's very, very simple. The data is in a very nice format. You can click here. This will bring you to our FAQ, and we walk you through the steps. Okay, how do you get the data? This is the day. If you're using the desktop or the web platform, you just go to history statement, you click on the arrow, and then you have your data pretty much. Then you just upload it here, and then everything is here. We're going to expand more on those automatic things, but those platform imports are really, really reliable, provide good data, and it gives you a good start to your journaling.
Nice. Another question, Rolf, with Edgewonk, is there a limit as to how many accounts you can have under one profile? How many trading accounts, I mean?
You can have over 100 and it's going to work fine. So
wow.
Yeah, 100 trading accounts should be fine for any individual trader, I think.
Yeah, I think that's good.
I think you're right. I think you're about right.
Yeah, we have not come across a trader who says I need more, which comes
wait,
frequently
you're gonna get one now. I promise you.
We've seen it every
one.
time we increase the slots for custom statistics. People say, but we need more. But with trading accounts, we haven't seen it. One thing that is coming is we have a portfolio view. So if you have 10 trading journals, 10 accounts, we're going to have a portfolio over all of your journals as well. That's going to come as well. But for now, we have only one view per journal. You can switch very, very easily. You can duplicate different journals. So if you have one journal, you want to just create a copy of it. For whatever reason, you want to test around with alternative strategies, make some changes, you can do that. Or you can just say, okay, I like the journal that is set up. I don't want to copy my trades. I just want to have the setups, the strategies. I like the way I entered my comments, my custom stats. I want to use that in a new broker account. You can do that as well.
So basically, one account, one Edgewonk account is all you need for all your trading accounts.
Yeah, that's the goal. We want to really make journaling affordable, and we want to give very transparent pricing and give traders just everything they need without any upcharges or add-ons or whatever. Everything is there in one Edgewonk subscription.
I must say that it's not only considering everything you get with the journal, I think it's the cheapest journal out there if you look at the monthly cost. Now I'm not gonna name any names, but I've like I said, I've tested many other journals out there, and they do restrict you on the number of accounts that you can add, things like that. So when I looked at the numbers, I think this Edgewonk was actually the most affordable option out there, and it's, in my opinion, not lacking in anything. So very, very affordable option. If you guys are looking for a journaling tool, this is the one that you should definitely try out, because it's like once you test it and you understand how it works, like I wouldn't be able to to function the way I function now as a trader without this tool, because this has now integrated into my whole trading plan, and my, my system is kind of like created from Edgewonk, and it's also maintained by Edgewonk. Looking at, should I have a tighter stop loss? Should I have, what should I work with my take profit? And then looking at the tilt meter, it's a big part of my edge. And I guess that's where the name comes from, Edgewonk, right? You're kind of creating and working on that edge, right?
Yeah, finding new domain names is hard these days because most good names are taken. But I think Edgewonk it sticks, and yeah, people.
It's definitely memorable,
Yeah, right.
I've got another question, Rolf. From your point of view, since you have a bird's eye view on, all the metrics, all the data, the traders, not just one, but all your customers, what they use. What would you say is or maybe the two most useful, impactful metric that you see traders use for their profitability?
So we don't have aggregate data on the journal usage. So we don't look into the journals just out of curiosity. When traders want us to review a journal and they give us consent, we do that. But what I've seen is when I do the support, I have done over 7,000 support emails myself over the years. The tilt meter comes up really, really high. I don't think I can boil it down to only one. I think the tilt meter, because it's just the cornerstone, the foundation. The trade management definitely comes in. What surprised me is more experienced traders really appreciate, as you said, the alternative strategies. We did a podcast with Ray Barrows, who is a former hedge fund manager out of Singapore. And he also said his favorite feature by far is the alternative strategies. So that seems to resonate more with experienced traders, which makes sense. You don't get into this in the beginning. But once you get into the fine-tuning and testing ideas, I think the strategies, alternative strategies comes in very handy. I think that's also the trade management, the tilt meter. Custom stats are, I think we have to name it as well, because people seem to really, really love it. They always want more custom stats. I think I would say those are if we have to boil it down to 3 or 4, those are the most used and most unique features that you will get in Edgewonk.
So nice. I actually don't, I don't really, the tilt meter, like, it's not really a big thing for me. I know, like, all your videos and everything, like, you talk a lot about the tilt meter, and I do understand how it's very useful for a lot of people. But I don't use it too much, like, honestly, I don't look too much on my tilt meter. Like you said, what I look for is the alternative strategies, and also try to see, like, optimizing that, see if I can use a lower TP or a higher TP. But would you think that maybe that's just because I'm lazy? Because to have the tilt meter working effectively, I have to actually, add the entry comments. And what I usually do is, I only really use the entry comment, and I have according to plan or not according to plan. I think that's all I need, really, because I only really need to understand if, did I execute well? Did I follow the plan? Because when it comes to stop loss placement, it's like I know that, and if my stop loss gets hit, it is what it is. Like, I'm always going to exit well, and it's going to be TP or stop loss. But entry trigger, I think, is very important for me. So would you recommend that? Like, basically, what I'm trying to ask is, where's the edge in focusing on that tilt meter, and would you recommend that I focus more on that tilt meter, and what type of information can I get from that?
I think the biggest benefit is for early traders who are still struggling with having the basic level of discipline, and you can bring awareness to your trading, which I think is really helpful. You can open the journal and right away see, okay, that's a good week. Only green, mostly green, some small greens, but green overall. But if you see I messed up big time, then this will lead into your next trades. And in the course, the first or the third video is called The First Challenge. It's a tilt meter challenge. And what I propose there is to go into your trading, into your active trading, and keep the tilt meter in mind. Think about, if I take this trade, will this affect my tilt meter red or green? And by bridging this gap between a journal, which is disconnected from your trading in most of the cases, we can close that bridge, the gap. So we can actually help you, or you can help yourself, that you start keeping that in mind. How will this impact my trading, my tilt meter? And I want to keep my tilt meter green. So I think in the beginning, it can be very helpful, but as you progress, you're probably not going to struggle with this. You have developed a level of discipline, and this is not a core issue. What I do in the reviews is also I say you focus on the big outliers. You don't try to go into the nitty-gritty in the beginning. You want to see where you can, with one change, have the biggest impact on your bottom line. And for most traders, it's there. But as you move on, it's going to be somewhere else. So it grows with you. Your focus shifts to other metrics. But in the beginning, you want to find out what is causing. And I've seen so many journals of traders. They have one entry comment according to the plan and not according to the plan. And the equity graph is just mirrored on the x-axis.
Yeah,
not
it's
according
crazy.
to the
It's
plan, it's
yeah.
going down. According to the plan, it's going up. And then once you see that, you know, okay, my system is actually profitable. I just need to pull it together and start listening to my rules. That's, I think, can be a big eye opener.
One of my biggest eye opener was when I did my weekly trade journal review, and I looked at all the trades that were according to plan, and then how many not according to plan. Like, not according to plan, 0% win rate, down 5R. According to plan, like very high win rate. Like, so I look at that, I'm like, what if I only take trades that are according to plan? And then I look at the equity curve, I'm like, wow, I would be making so much money if I just made sure that whenever I enter a trade, I need to make sure that that is, is this going to bring my tilt meter up or down? And then, like you said, also kind of like what you focus on in the journal will change over time. And I think in the beginning, I did focus a lot on the tilt meter, and maybe that's also why I don't have to focus on it too much now. You know what I mean? Like I've developed into a better trader because of that. So yeah, I think it's a
yeah, I think that's the value of journaling, right? It's bringing awareness to, it's that reflection that you get after you do reviews, and in this case reviewing your data, which is what the journaling allows you to do. And that awareness is what's going to help you, shape your behavior going forward, because that's what it's about. It's about those moments we deviate from our plan and we get worse outcomes. And that awareness, you seeing it, I think that goes for most, if not everyone, will help you stick to the plan next time.
Totally. And as you said, you look at your data at the end of the week and you see, okay, I lost pretty much all of my profits on the trades that I shouldn't have taken. If you keep seeing this week after week after week, and you see that I could have had a profitable month, but I did not because all of the trades that I know I shouldn't be taking, then this will lead to a shift. And hopefully you will get fed up at one point. You will be sick of your bad trades, and then gradually you can start making better trades. You're going to move to break even, slightly profitable. And as you make improvements, that will also create momentum in your journaling. You will see the value of it more. You will see that, okay, what I do and change my behavior, it actually leads to better trades. That's then that's the goal of keeping a journal. You want to slowly start shifting your equity graph, and then that builds real momentum. You feel encouraged, you feel confident, and then you'll feel more likely to keep it up. When you're in a slump, I know it's hard to maintain a journal. It's tough to face those numbers, but that's the time where you should be on top of your journaling game.
That's the most important moment to be journaling, right? Where you can see that you're actually doing the damage to yourself, basically.
Right.
Yeah, I mean, it helped me a lot when I'm in the drawdown. It's kind of like my best friend is the journal. It's like I'm in a drawdown, I go to my journal and I find the confidence in the journal, because like I can clearly see what part of this drawdown is natural and what part of the drawdown is mental. Like, it's so clear to see, like, also with the tilt meter, you know, if I see that I'm in a drawdown and I'm also red on a tilt meter, that means it's my fault. You know, it's my fault that I'm in a drawdown. But sometimes you'll see that you're in a drawdown and the tilt meter is green, which most of the time means that that's okay. It's just your system. This is just the natural cycle of trading. You're going to go in drawdowns. You know, the equity curve goes up and down. So yes, very, very insightful. Rolf, it's been over an hour here, and I'm sure that you've done many presentations like this one.
Before we go, I have a
Yeah.
small little question I think is makes sense to answer it. There is a viewer that asked, is it possible to display the results in Edgewonk in R multiples?
Yeah, totally, of course.
Okay.
So we build everything for R multiple. So here, for example, the equity graph, you can switch between returns. Then you have the sum of the gain. It's different. There's a whole documentation, but we have R multiple, the ROI as well. You can go to your trade analytics, which is the table I showed you. And here you have your P&L, average P&L. You have your R multiple, you have your average R multiple. So we really focus, Moritz and I, we really love the R multiple. So it's pretty much everywhere where you have a chart or a data breakdown, you can look at it in terms of R multiple, percentage, and your account currency.
And what about the maximum excursion being it favorable or adverse excursions? Is there a way that is also displayed for the viewer or the user to see, okay, this is what was left on the table on each trade, and either get an average of that, or is it something different on Edgewonk?
This we have, obviously, but it's not in R multiple, it's in percentage. We find it's also very easy to interpret. In Edgewonk, it's called, here, we call it drawdown, which is not the account drawdown, it's the drawdown of your price, and we call it updraw. So those are the two metrics. Updraw is how much does the price move into your favor towards your take profit, updraw towards your stop loss. And we have that, you can get the very detailed breakdown. And that's what we have MAE, MFE as well. It's in points. I find it's not as helpful because you have to look at all of your trading instruments differently because they have different point ranges. But the updraw and the drawdown does the same, just in a percentage figure, which is much easier to read.
Nice, nice, very, very nice.
All right, Rolf, is there anything you'd like to add here? Anything else you'd like to show here?
No, I really had a great time. I think this has been the most fun webinar I did. So it was a pleasure here.
Nice. I mean, what I'm going to do here is, for everyone watching, is I have a bootcamp account evaluation that I'm doing right now, and I'm going to be, as you know, what I'm doing right now is I'm going to be adding this to a new Edgewonk journal. So I've just created a new one, and I'm going to activate the automated import, and then we're going to have a break, and then hopefully after that break I'll get all the data in Edgewonk, and I'll show you what the statistics of that evaluation account is, because I'm doing a challenge here. I'm trading that publicly, and I also want to show, like, it would be really cool to show that right inside Edgewonk here. But Rolf, it's been a great pleasure. Again, I'm really happy that you came on here, because I do think that Edgewonk is the best trading journal on the market. This is one I've been using a lot. I'm trying to get Victor to buy the Edgewonk journal as well. And I'm saying, like, every week I'm like, well, you need this one. This is the one you need. So yeah, I would like to thank you a lot to join here. And where can people find out more about? Because I know that you're not only with Edgewonk, you also have a pretty huge YouTube channel. So I'm pretty sure that some people recognize you from that as well. So where can people follow you and learn more about you?
Yeah, Edgewonk, we have a blog. The YouTube channel is where we do mostly the user reviews. Tradeciety is the other channel, the YouTube channel. There's also a very extensive blog. there's this book I've written a few years ago. Maybe some traders might recognize it. Yeah, that's where viewers can find me.
All right, so all the links, you'll find all the YouTube channels and everything, you'll find that in the description of this YouTube. Rolf, thank you a lot for joining us here today. It's been a pleasure, and I hope you are going to have a great great rest of your day.
Thank you so much. It was a real pleasure. Thank you.
We're gonna
Thank
do
you,
a
Rolf.
10-minute break, and then when we're back, we're gonna be starting the giveaway, and I will also start importing all the data into Edgewonk with my Bootcamp account, and we'll look at the statistics. We'll see if we can find anything interesting. See if look at my tilt meter. Might be very embarrassing. Who knows? All right, guys. See you in 10 minutes. Take care. All right, welcome everyone. What's up? Hope you're all doing good. Why are we looking weird? So that's better. Thank you, Victor. All right, that was exciting. That was a good
yeah,
yeah. That was good, man. That was really
some
good.
awesome presentation, and I think it's very powerful. Data tends not to be something sexy, right? Because it's numbers, and that usually isn't what attracts attention. But it's the good stuff. It's where you find and not only discover, but where you hone your craft as a trader. It's one
Yeah.
thing to read, skills to read the market, skills to build your system, which are all very important. And in that system building, you can't go around the data. You need the data to build your system. But even after you have your system built and you are doing well reading market, you have to be monitoring your performance. And how do you do that without data? You can't, right? So you need a way efficiently to do that. And Edgewonk is certainly a very good option to do that. And I think I'm very I'm excited to try it out.
Yeah, so let's get that giveaway going. So you guys can find the link to the Gleam page, the giveaway, and I see that we already have quite a few entries, which means that you guys have probably already figured out the code. And if you guys can, let's see if I'm going to give it a couple of minutes. Let's see if you guys can figure out the code. Let's write in the comment. What do you think the code of today's Edgewonk giveaway is? And we're not only giving away 3 yearly subscriptions to Edgewonk, we're also giving away 3 Bootcamp accounts. So yes, that's right. That's right. The code of today's Edgewonk giveaways is, surprise, surprise, Edgewonk. So if you go into the Gleam link that's in the description of this video, you will be able to participate in the giveaway of potentially winning 3 yearly subscriptions to Edgewonk, as well as 3 bootcamp evaluation accounts with The5ers. So in total, 6 lucky winners. You do not have to put the actual code in the in the comments. So what I'm gonna do is, if you guys continue to spam Edgewonk in the comments, I will have to yeah, okay, it's obviously that's not gonna work. So I will go in and I will basically just mute that word for now, so we don't get that problem in there anymore. So I'm trying to set up the auto sync on Edgewonk with my MetaTrader account, but I'm running into some issues. I think it's my desktop, because I do have, when I do it on my laptop, it works beautifully, but when I do it on my desktop, and I think there's actually some problem with my installation of MetaTrader on my desktop, because my position size calculator is also not executing my trades automatically. So I think I need to just reinstall that, and I'll
Would you like me to do some market analysis while you try to figure that out, or?
Yes, please do. Thank you.
All right, so no problem. Let's get to the charts. I will be showing EU, as you can see on the screen. And as you can see, I have a position on, actually more than one. This is basically the trade. The trade has already triggered and I'm already in it, but it's not about my trade. It's not about this setup, because this is not a signaling service, right? This is not about taking trades with me. So I'm going to put this away for now. But what I would like to say is let's look at the market. What is the market telling us, right? I'll do a short version of the analysis. We are currently in a weekly supply zone. Weekly supply zone based on a quasi that is to the left. All quasis are to the left if they are already formed and activated, but this one has been mitigated before. So it is a second attempt, or even the third touch on the order block, but it's still, because it's on the quasi, I don't look at the freshness of the order block, right? An entry order block on the quasi is the freshness, right? The number of bars since its creation is not very relevant. So that is one thing. Currently we have a pin bar with a non-existent body on it, right? As a reaction when it went into the order block on the weekly. So that's very interesting to see how it will develop in the rest of the week, and to see if it's going to close like that. We don't have anything else, though. If we go back to the weekly, we don't have any other information, because it's just one bar, right? So we'll have to have more information to see if it's indeed a rejection of that order block or not. We go to the daily. We don't have much yet. We don't have much to go with, right? There's no rejection here. There is a candle that is, let's see, the wick is 57.5 compared to the rest of the body. It's less than half. So even in the most conservative definition of a pin bar, this isn't a pin bar. If we go to the lower time frames, we do find an area that I spoke about earlier. We have an outside. This is not an outside bar. This is an engulfing. We have an outside bar, not an outside bar here either, but another engulfing. And here we do have that outside bar. So it tells us that this around here, this is the area that the buyers came to the market, right? So this is the importance, where this is a demand area, and price comes back after it hits that weekly ATR, comes back into that area and starts forming bullish engulfings again, right? Bullish structures on the H4, which is the basis of why I entered. And if you go to the lower time frames, you can find as well on the H2, for example, here, I didn't mark it, but because I didn't use it. But there is an H2 order block here as well. Price creates it, right? That's the recurrent theme always with how I trade the order block. Price creates it, moves away, comes back to it, and then you can take it long, right? That's the move. I didn't use it because that wasn't part of the setup. I had a different way to approach it, but it doesn't matter. Fact is that this area is the demand area, right? Defined by different confluence and different alignment. And that is the area. So I wait for price to get into that area. You can see I have it indicated with yellow horizontal lines, because that's, as I zoom in, that is where I think it should start making a reversal. If it doesn't do that, then it's fine. Then either I get triggered and I don't get any entries. In this case, I did get triggered. So I am in one of those, I actually am in quite a few entries. And as you can see, if you are familiar with how I trade, you can see how the price forms the order block, right? That's the 1 hour. It forms it and comes back into it. And this is where you need to be looking if price is, forming those reversal patterns, breaking those structures and starting to form bullish order blocks or bullish structures and price action. And I'm still don't know if this trade will be working out, but it looks like it is finding support and it's trying to break those highs. It hasn't breaking those yet, but this would be the confirmation that the reversal has happened. It breaking it, coming back and respecting either these breakouts as break and retest, or come lower and respect something else in this area, perhaps, as it is moving out. And that's the trade plan based on the H4 and H1. On the daily, there isn't anything. So because there's nothing on the daily, I don't want to be holding this for very long. It's mostly going to be a day trade, maybe an overnight, but I'll decide that by the end of the day. And then I have to, the first question is, where do I put my stop, right? The stop is where the trade is invalidated. Where is it invalidated? Well, this is the area, right, within the H4 that I'm trading. So if it breaks this area, it means that my trade is not going to work. As simple as that. And so my stop should be below that area, right? That's where the trade is invalidated. And the other question is, where do you put your TP, right? TP can be placed different places in terms of the range of the day, depending if you want to close it before the end of the day. It can be placed at the opposite, at the structure in the opposite direction. And we have some H2 order block above us, H1, we have another H1. And depending on the ATR that you use, depending on the value you have, your ATR level for today is in between these two structures. So if that is any idea, any hint as to where price could reach today, then I would say it's either going to be this one or that one. As simple as that. It's not rocket science, right? So if your ATR has a bigger number, a bigger value that it takes into account, it looks to the bars more in the past, then it will not have a big range yet, right? Because the volatility just started coming back to the market. But if you have a lower value in your ATR, it means that it's more sensitive to recent price action and ranges, and that would make it probably telling you that the ATR will give you an area around a little bit higher, because it's assuming that the range or the average that's measuring is higher. Which ATR value is best is not, there's no universal answer for that. It depends on your personality, your trade, and your data. So that's why I offer you both options for you to try out, test it, and maybe use Edgewonk to find out which is the best ATR value you should be looking, right? You can make a custom tag. This is the setup with, the TP is based on ATR, which has a value of, let's say, 20 or 30, and you have another label, right, custom label, where you said this is when I have my ATR at value of 10 or 8 or whichever you like, and then you compare those two, and that's how you find your edge, right? By comparing, what if I did this, what if I apply this rule, what if I apply this setting, or etc. So I have both of them, but these are the logical places where I would be taking a TP. And you might say, well, why do I have my TP here? Because the market is very bullish, right? If you look from previous price action. Isn't it likely that price is going to go much higher? And yes, you may be right, but that's the type of trader I am. I'm not a swinger, so I just want to take this from one area, just like Sol said yesterday. He's only taking it from one area to the very next level. I don't take it to the very next level. I take it to a next level, but another time frame, which is a bit further. So I'm not going for 5 to 10 pips or something similar as he is, but it's still the same kind of concept. I'm going to the very next level just on another time frame, and I'm not a swinger. So that's how I trade. So you may be, if you're a swinger, you may use this entry to hold and profit for more, but that's up to you. That's on
I have something, just a
Yep.
quick thing to announce here. So you guys know that, we've, in the past, we did quite a lot of giveaways. We had a lot of people joining the giveaways, and we had loyalty points where people would join, and the more giveaways you watched and the more live streams you watched, the bigger the chance of actually winning a prize. But we also have a lot of people that came in after applying that. So a lot of people, they talked about how, they started asking, when are we going to say, reset the loyalty points? And what I've done today is I've actually reset that. So everyone who enters the giveaway today does so on the same level. Everyone in this giveaway today has the exact same chance of winning an account with us and with Edgewonk. So what we've done now is, from now on, the giveaways are reset. I know a lot of people will not like this, but I also know that a lot of people will like this, because we are changing the way that we're structuring the giveaways. Like you've seen, we're not doing giveaways every live stream. We're only doing giveaways when there's something to celebrate, or when we have some guests on that we think is worth, combining a giveaway. So from now on, we've reset everything, and from this very giveaway live stream right now, this is when the loyalty points start. And also, in the future, we're going to do giveaways on the live stream that's not announced, so make sure that you actually go in, you watch the live stream, and you look at the content, and you try to learn something from what we're talking about here, because in the future, the giveaways will be more integrated into the actual content that we're creating, because we want to make sure that the winners of our accounts is part of the core content and the core audience of our YouTube channel. So yeah, just trying to make it fair. And the code for the giveaway is Edgewonk, and you will find the link to the Gleam in the description of this video. So you'll get, I believe, 3 different entry points or something like that for this one. Yeah. And Bruno, I know that, for some people, the times of the live streams are going to be bad, but you got to remember, like, I live in Sweden. If I go live at every hour of the day to please everyone, I would be going live in the middle of the night. So for us to have a consistent schedule, it has to kind of fit with, the time zones that we are in. But we are, planning, and we're talking about, expanding the live trading room and doing other times as well. But that's something for the future. What I wanted to do now is I wanted to show you guys a let's see, right one. So I want to show you guys, I'm going to share a tab, and I have so many different ones here. So I'm going to see if I can select the right one. I think it's this one right here. Yes, it is. So this is the 100K Bootcamp Evaluation Account, and I started this on, I believe, in July the 10th. And as you can see here, I have 12 trades. I have a win rate of 75%, which I'm very, very happy with, because you guys remember that. This is good. Yeah, Alex, his holiday is getting way too long. We need Alex in here. I do. Yeah, definitely. We need Alex back. I'm gonna send this to him. Maybe he's watching on his bike somewhere, biking around the world. Yeah. So
I hope not while he's driving.
Yeah, trade and drive, not a good combination. Drive and watch the live stream, maybe, maybe not, probably not. So yeah, 12 trades, 75% win rate, which I'm very happy with, because if you remember when I kind of started working on increasing my win rate, because I wanted to switch from having low win rate and high R to high win rate and low R, because that worked better for my psychology. You know, I function much better with a high win rate, but overall I'm actually making less money, but I have a higher win rate. But it works much better for me because it just fits my way of thinking about this much better. So you can see here that on the 100K account, I'm in $661 dollar profit, which is 0.68%. And I do assume that I want this to be higher, obviously, but I'm also thinking long term. Like this is an evaluation account, yeah. And if I make 0.5% to 1% every month, it's going to take me quite a while to get to a funded level. It's going to take many months, actually. But I'm also thinking long term. This is what and this is what I'm trading on my bigger accounts as well. Everything just gets copied over to this. So this is a pretty good reflection of my personal trading as well, but with slightly different risk, and sometimes a little bit dynamic with the risk on my personal account. And I'm actually risking a bit more on that. And then on some accounts a bit less. But if this would have been if this is my 160K account funded, then 0.68% is still decent, and then I'll have some months that are a couple of percent in profit, and maybe some. But as an average month, this is a little bit lower than what I would want to have, but it's still much better than not being profitable. And then we can look at what happens now is if I switch to the R multiple. Now this is not going to be correct. This is something I wanted to show you guys. If I switch to R multiple, it says 6.55 R, which is not correct. It's too much. If I go to the journal here and I go all the way back here to
I would like to interrupt you, Jonathan, for just a little while. You said 0.68%. Before you continue, 0.68 is below par, below what you expected, below your average. But listen, guys, and that is correctly. I mean, if that is so, that is a fact. But for everyone watching, what's important is to be consistently in the positive. It doesn't really matter if you're not very high or not. Just think about it. If you can make 0.68% on a 100K account, that may not sound like a lot yet, but you can have more than one account. And you can, what is it if you have 500K in capital, right? What is it if you keep on growing? There's nothing stopping you from growing your capital. So 0.68 may not sound that a lot, but it's actually not bad at all. I would even say that's solid profit to be have. I would say you shouldn't talk it down. It's good. It's solid. I like it.
Yeah. I mean, and it also depends on where you live in the world. Like this for me would mean across my account would mean a 2K USD win, and that's still a decent amount of money. But then you have to pay taxes and all of that. And in Sweden, we have a lot of taxes, and I have to go through my company, and it's just it's a mess, So in the end, it's way less than 2K. But if you live in a place where 2K is way more money, I mean, if you live in Bali, for example, 2K would 2K USD a month would buy you quite a lot of stuff, pretty nice place to live and all that. So for me, I'm very happy, like making 1% a month. I'm very happy with that. Some months I'll have like 2, 3, 4% profit, and that's really nice. It could pay for some nice things, and it can also pay for a couple of months of a decent monthly salary. So yeah, I mean, when you start looking at bigger numbers, when you accumulate everything, and let's say you have like 200 or 300K in funding, I mean, you start thinking about a couple of percent profit a month. That's quite huge, actually. So yeah, it's good numbers, but it's not the numbers I'm used to. But also this win rate is way higher than I'm used to. I'm used to more like 40%, which that 4% win rate created a lot of drawdowns for me as well. So I'm very happy, you know, with the way this is looking. But what I wanted to show you guys is R multiple is 6.55R, which is not correct. If you look at equity graph here, you'll see that if you go to the R multiple, you'll find that it's a big, huge move to the upside right here, and that's because of this trade right here, which is on Euro USD, and the risk to reward of this trade here is actually, I don't think I can find it on here. No, so I'll have to go to the journal. And what I do sometimes, because I know that my winners are usually, like for this journal, my winners should not be higher than 1R, okay? So if I go to R multiple, there's actually one trade which is 1.33 and then 5.71. And the 5.71 is definitely wrong. And what has happened here is I have moved my stop loss after the exit. So I have my original stop loss, and then I move it, and then I exit. So what have happened here is Edgewonk has calculated this as that moved stop loss as my original trade. So what I can do is I can go into the charts, and I go to this state right here, and on Euro USD, and I have that trade marked out, and I have everything saved because, you know, I have my folders and everything. So what I'm going to do is I'm going to go into, I'm going to share that, I'm going to share Trading View with you guys, and I'll show the whole, I'll show everything for you here. So that's this is Euro USD, and then where do we have the journal? Right here. Bear with me here a second. So this trade was taken on the 23rd of last month, I believe, which should have been, it's somewhere around this level. Now, I'm not sure why I can't find that trade, because it should be saved. Let me see if I can go and go to the lower time frames. Is there a trade taken here? Okay, so there's obviously something wrong with this here. I probably removed it or didn't save it, but we can add, you know, this was a short and it was entered on the 23rd at 16. So here, so I can clearly see what this trade was all about. And then I put in the take profit and the stop loss that I have in Edgewonk and my entry time. So according to Edgewonk, then this would have been the trade. Actually, that's correct. So I don't know why it's showing. I don't know what's showing. Showing that. Let's see. The R multiple, because the R multiple says 5.70.
But I understand what you're saying. What your the R multiple is based on the last stop loss, but that last stop loss was not the original stop loss. Your original stop loss was
you
much
see
wider.
Here that, yeah, okay, so you look at this. Now this makes sense, and now the stop loss is for and profit here, and then entry. So now it creates something like this, which is obviously. So the mistake I've done here is basically I have removed my actual trade, but you can see that here that it would have been a trade. Now what I have to do is I have to adjust this. I have to make sure that the numbers are correct here. And what I can do is I can go into my original journal and look at this trade and see what the actual statistics are, because I've synced that, right? But the beautiful thing about this is now we can, you know, when we have this, we can go in. Which one is this? Is it this one? Yeah. So now we can, you know, go in here and we can start looking at, so we've got the equity graph here. Now this is in dollar return. Now this is correct because the dollar return will always be correct, because you're either lose an amount of money or you gain one. So this is all will always be. And now we can also display the tilt meter. Now the tilt meter I haven't, there's nothing added here. So because of the fact that this is now a completely new journal and I've added all of these trades into the journal, it does not have any statistics. So what I have to do, and I'll probably have to do this over the weekend because it's going to take a while, I have to go through every single trade, make sure that these two trades that have way higher risk to reward, I adjust them so that the risk to reward is correct. And then I will also add custom statistics and entry comments. And this is really cool. I can go in here, and so I go to settings.
Can you show the equity curve in dollars? Yeah, that one. And what does it say? What it's 600 something, right?
Yeah, exactly.
At the end, 600 something. Okay. And what is your R value when you enter in dollar terms? How much are we risking per trade?
I'm risking. How much am I risking?
Account.
I'm risking on this account. Let's see. I have to.
What are the losses? What is the value of the losses? The dollar value on each loss. If you look at the.
Yeah, let's see. I go to the journal. I think it's 0.5%. So it should be 500. Let's look at the loss here. How much did I? So this one is 230. Yeah. Oh, this is 800. I think it should be. So
if it's 0.5%, then it's 500.
Yeah, and
I don't know.
This is bigger than 500. So maybe this was just a bigger loser than. But I think it's 1%. Actually, I have to go into my. My copy trader to actually look at what risk I have.
Because what we can do quickly to get an idea is just to divide that number, that P&L that we have at the end of that equity curve, divided by the average, not the average. Well, you can actually take the average as well, but you can take just the R value that you're supposed to be taking, which would be 500 perhaps. And if it's 500, you divide that 668 by 500, you get the R value.
You're so smart,
P&L.
Victor. You're so smart. That's of course that's the way to do it. Yeah, of course, because then I know where the stop loss would have been placed originally. Yes, it's 0.5%, which is funny because you'll see here that this is actually a bigger loser than what it should have been, 822. Maybe I risked 1% on that one for some reason. I can't remember, but well. The cool thing here is that I got 3 losers and they all came at the same time. No, not at the same time because I've structured this after the R. So if you look at entry 2, yeah, so not at the one at the first time. But this is
exactly the process and the value of journaling. Now you're going back and you're getting aware and you're asking yourself, why did this happen? Better is good or bad, doesn't matter. Why did this happen? Look at it. Something is out of the ordinary. Why?
Alex says here that maybe I move my stop loss, but I never move my stop loss. I've never done that. I put my stop loss in, I calculate my risk, and I never move my stop loss to increase that risk. If I have to move my stop loss, I would exit part of the position to make sure that when the stop loss is hit, it's going to be the percentage of the account. So what I did here was probably
human error.
Human error or news event. Could be
a slip.
Could be slippage on a low time frame trade. I don't know. Could be. I don't think so though. I really don't think so. But yeah. But yeah, what I can do is here, if you go to settings and then click trade comments, this is all the trades comments here. And what I do here is, like I talked with Rolf. What I do is I plus add. I press add, and then here I'm going to say according to plan, and that's a positive comment. That's going to make the tilt meter turn green. Add another one that's going to be negative, not according to plan, and that's all I need. That's all I need to manage my tilt meter. I'm not gonna be adding anything on trade management and not on trade exit, because I don't have clear, like, I feel like I don't have clear rules to follow that.
This viewer has a very good point.
You know, I have to look into that, because I actually have a weird situation where one of my evaluation accounts hit I actually lost an evaluation account like last month because a trade I took on AUD apparently hit stop loss, but it was a winner on my main account. So I think, yeah, I really need to look into that. That was a huge, like a huge loss, which ended that account because of what I think it's meant. I think it's human error, but I have to look into that because I think I deactivated the account when I was in a trade, and then
That makes sense.
that it didn't trigger the stop loss or something. I don't know, like something weird happened. But
that
yeah,
makes sense.
there's a lot of things you can do. So what I'm going to do is over the weekend I'm going to go through every trade and I'm going to be adding. I'm going to be adding. I can go into the trade here, and then I can go to advanced, and I'll be entering entry comments according to plan or not according to plan. And I can also do some cool things here with going into custom statistics. So I can have one custom statistics, which is entry trigger. Yeah, just do entry trigger. And here I will do 4-hour engulfing. And then I'll do reload zone. That's basically all my entry triggers. I'm also going to do
Outside bar.
Nah, I don't look at that. Honestly, like I try to both outside bars and engulfing. I add them as both engulfing, just for to make it easy. But because to me they work in the same way, and I've seen that they like for me in the way I'm trading, it's basically the same visual confirmation, But maybe I should look into the difference of that.
Maybe that's all you can. That's one of those things you can do easily with having a good journal, right? If you think
Yeah.
about it, you can think, and this takes a little bit of creativity, but you can think of many tests. Many questions, right? Research questions. What happens to my P&L if I stop doing something, or if I start doing another thing? What if I start measuring, only, if I have H4 engulfing plus I have H2 engulfings, when they happen together, does that make any difference for my P&L? Those are simple questions, but those things can be very powerful if you see a huge difference in result, and that might be a new rule that you only trade when you have those two criteria satisfied at the same time.
This is pretty cool. If you look at the last week, 100% win rate last week, and then if you look at the week before, 71% win rate, and then overall like 72. So I think I'm very, very happy with the results of this, and it's going to be very interesting to because basically what I'm going to do here is I'm going to trade this evaluation account publicly and show you guys the process. And this is most of these trades that I'm taking here is also copying from my personal accounts. It's a big thing, and I try not to screw it up, but it's also a way to make myself accountable for the trades I'm taking. Obviously I don't want to trade badly. I don't want to take bad trades. And because now I know that I got hundreds of people watching me make the mistakes. But yeah, enough rambling. It's we're almost at 2 hours, and I think it's time to do a giveaway here. So what I'm going to do is I'm going to see if we can start drawing some winners here, and I'm going to see if I can see how I can do that live. Okay.
The excitement is being felt in the room.
Now I'm not gonna not gonna share my screen right away because I'm not sure if I'm gonna share some sensitive information here. So I will see if I can do that, and then that I will, because there was no Yeah, I think I used draw all the winners and now I didn't. Okay, can I announce winners?
Maybe you can make a screenshot and put it on the charts.
Wait a minute. Okay, not that. Winners. Okay, here, winners. Winners.
In the meantime, maybe I can look at the markets for maybe
Yeah,
2-3
please do
minutes.
that so I can see if I can make any sense out of this.
All right. So what we indicate, what I the trade is still valid, is based on this order block below us, and we can see on the 15-minute that we are we haven't gotten another signal on the 15 minutes yet, but we do see. Let me get this a little bit zoomed in so you can see, right? So if you have, like I do, the neckline here on the 50-minute structure, you can see that this is the 50-minute entry order block, and it's actually a little bit lower. No, it is. That's the. I think this is the one. Yeah. So this is it, and you can see how price comes into it, right? This is the structure, right? So it goes down, goes up, goes down. That's the left shoulder. The head breaks the structure. Where does it come back? Comes back to that order block, right? It goes up. It's not ready yet. Comes back. It reacts very neatly on that upper border of that order block. Moves out. Comes back and it reacts again. As you can see, it's not coincidence that it's reacting and leaving those. For example, here it's leaving a wick, right? A lot of the times you hear us saying a wick can be a sign of rejection, right? It depends where it leaves the wick, of course, right? That's the wick. Look at that. Look at all these wicks here. Those are indication that, the turf is being defended by the buyers. In this case, the buyers. And it's and yes, this was scary. If if you're a discretionary trader, that trade, that it's, I think it's even an outside bar, which is makes it even scarier. um Interrupt me anytime you want, Jonathan, when you're ready. We
Yeah, I'm
have an
soon
out
ready soon.
Okay, just let me know. There's an outside bar there. So that's, if I were just discretionary, I might think, okay, I need to close this because the trade is not working out. I'm running out of time. The day is almost over, and it shouldn't be doing this. That's right. However, I'm not. That's why I don't like being a discretionary trader. I don't like it to depend on my opinion or my emotions. So I would like to just, if I have my TP, I have rules when I get out, and just an outside bar or any other structure that may look ugly to me is not a valid reason to get out. And this is what the market does all the time. It frightens you, but then leaves a big wick. And if you got out, you will now feel this tricked me into thinking it's going to go much lower. And while this maybe will be going up, we still don't know what the results will be, right? We'll have to see. Maybe it'll do nothing, just maintain this this range as well. We don't know. It should have, given the time of the day, it should have started its impulsive move already. So, but that's the beauty of having a leaning more on a mechanical rule-based system, that you don't have to second guess the system. You just follow the system. That's it.
Okay, so I'm going to announce the winners here shortly. Give me a second. I'm gonna do it in a bit of a different way here because I cannot get my the giveaway tool that we used in the past. When we showed names, is not working. So I'm just gonna do it like this. Okay, that will have to do it. The first one is maybe, you know what, maybe you can share your screen and then just talk a bit about that, and I'll have them on here shortly, and
No problem.
I'll
No problem.
share all the
Take your time
usernames.
and interrupt me anytime you want.
Yeah.
I will fill the time with some good analysis. Okay, so there's nothing really for me, at least based on this trade, to tell much about. I just went over why I entered. There was someone in the chat that mentioned they rarely see someone using the H4 for their trades. To be honest, I don't look at.
Oh, I'm only using the H4 only.
That's what I wanted to go to.
Yeah.
I don't look at many other traders, but in my perspective or in my experience, a lot of people, not the most, but a lot of people, even swing traders as well as short-term traders, they use the H4 a lot. So I don't know, maybe you have a different experience, but that's fine. But I start my setup with an H4 always, and that is something that's just a personal choice that I make, right? It's
Okay,
not
I'm ready.
about.
I'm ready.
You're ready? Okay, go ahead.
Yeah. Right, there we go. That's the winners. We got firing. We got Andre trade. That's pretty cool because Andre, I've seen you a lot in this webinar, and I get it. Prabhu, Mac, MV, and AVVATs. Okay, those are our 6 winners. Now, the 3 first one has won a 100K Bootcamp Evaluation account, and the 3 last one has won a yearly Edgewonk subscription. So what I'm going to do is I'm going to email you guys, and I will email you tonight with discount codes for Edgewonk, and then tomorrow I will email everyone with the code to use for the 100K Bootcamp Evaluation account. Now, please answer that email. If I have not gotten the answer over the weekend, then I will assume that, and I see that the discount codes haven't been used over the weekend. Then if none of the prices are claimed, I will give them away to someone else on Monday. All right, I think that's fair.
Congratulations to everyone. This can be a very pivotal moment in your trading career. It's an account, and it's if you treat it well, it can mean a lot for you. It can be that first stepping stone that pushes you into profitability and a lot of profit. So treat it as such. Potentially can be very, very important for your growth as a trader. So don't take it for granted. The fact that you just won it without paying anything, it's still very, very valuable. So make good use of it. But above all, congratulations on all the winners with today's giveaways.
Yes, congratulations everyone, and I will get in touch with all of you who won an account with us or with Edgewonk. And this is the last live stream of the week. Next week we'll be back with more live streams as usual, more live trading, and who knows, maybe a giveaway or two, because now we've reset the loyalty bonuses as well. So make sure that you come in for the content that we're going to provide next week as well. All right, thank you everyone, and thank you Victor for this week, and I will see you all not tomorrow. I will see you all on Monday.
All right, guys. See you. Bye-bye.
Take care.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube